We kicked off the week with the U.S. holiday and a Canadian holiday, but Tuesday we did get some volatility. We had a big news day for Australia, and tomorrow we have a big news day for CAD. Let's talk about it here. Traders, guys, welcome back to Capital Markets. It's your host, Cleveland Bishop. Excited for you guys to be here on the channel. Here at Capital Markets, we discuss the fundamentals and the technical analysis. All right, so make sure you guys stay subscribed. And if you guys ever have any question, please comment down below. Actually, the first person to comment down below, get their comment featured in the next video. Okay, so guys, make sure you guys comment down below with your questions and we'll get them answered. All right, so today on Tuesday, we had a pretty interesting day in regards to the Australian dollar. We had a rate statement. Right now, Australia's rates are at 1.5, which means right now you're getting 1.5% interest on a multitude of different Australian bonds. All right, and they decided not to raise rates, and that actually was expected. Australia didn't move too much, the actual currency itself. All right, and here's a quick example here. The Euro AUD, you guys can see markets somewhat consolidated up there in that high after a massive rip higher. Look at all that Australian weakness. We're going to talk about that in just a second. Now, what also came out today was a GDP report. That GDP report again came out positive, 0.9% return year over year GDP, but I don't think that's quite yet factored in what's happening currently right now with China. By the way, also Australia tomorrow has a trade balance data release that will be coming out as well. Now, when it comes to Australia and China, China is the largest importer of Australian products. Okay, and so right now the Chinese renminbi is having a horrible year, and the overall Chinese stock market as well is at all-time lows for 2017 and 2018. Okay, so here's a quick screenshot of the Chinese markets. You guys can see a massive sell side, and all of that weakness that came into China again is transpiring and showing over here in the Australian dollar as well. So when China gained all of its strength over the past 2-3 decades, you actually saw Australia come up with China. Okay, these are neighboring economies. They're so close in terms of vicinity that they're of course are going to see economic growth and economic stagnation if one or the other. Mainly if China is affected, you will see Australia affected as well. So what could make this Australian market turn around? You see the Chinese market start to turn around. Okay, so right now we do have $20 billion in tariffs for U.S. goods, and China has cracked down on $20 billion of Chinese goods. All right, and so that has somewhat given many market participants a little fear in investing in China, and again that has rippled over to the Australian dollar. Now we also see that rippling over into the New Zealand Kiwi because Australia is the largest importer of New Zealand products, and that being the case, of course you're going to see a rippling effect all the way through the global economy. But it does somewhat stop with Australia and New Zealand. If this was the US, obviously you'd have a massive global financial crisis, but the U.S. is actually, throughout this trade war dispute, the S&P 500 has been increasing month over month. We actually did hit an all-time high again in August. Okay, so some markets are being affected by this trade war, some markets are not. It's going to be our job as analysts and your job as a trader to anticipate exactly what markets we will see affect, maybe appreciate or depreciate because of all the different things happening geopolitically in the Asian markets and obviously in that Australia market. Now, again, tomorrow we do have a trade balance. Trade balance helps us rationalize imports and exports. We don't know quite yet if we're going to be able to see the effects of these tariffs from China in that trade balance statement tomorrow in Australia. So that's going to be something very interesting to watch that I want you guys to keep an eye on. Okay, so moving over to Wednesday, we actually have a very packed day in regards to the Canadian market. All right, so Canada is also having a rate statement. They also have trade balance. Later on this week, they have unemployment claims. I mean, there's a lot of things going on with the Canadian market. And right now, Canada, again, a very interesting economy in regards to the U.S. market. Right now, NAFTA negotiations are hopefully going to be finalizing with Canada. We did just meet an agreement with the Mexican market, and so now it's time to see if Trump and the Canadian administration can get together and figure something out in regards to our trade. All right, so Canada and Mexico want a trilateral agreement, but the United States wants a bilateral agreement. They want a separate agreement with Canada and a separate agreement with Mexico, but that's probably not going to fly. And that's what NAFTA is all about, the North American free trade agreement. It's the three countries being able to trade freely from border to border. Okay, and obviously Mexico would love to import goods into Canada. They don't want to be double taxed or have an instance where maybe they have free trade with Canada but no free trade with the US. Then again, technically there is no free trade. All right, so again, it's very important for these guys over here in Canada to meet an agreement to where there is a trilateral union. That's going to be the best deal, and if we don't see that deal, we may start to see the currency price affected by that. And then lastly, with the US dollar, we'll be talking about the US dollar later down the line this week. There's a lot of data obviously coming out for the US dollar as well with NFP and things of that sort, and make sure you guys are here, okay? And by the way, if you guys need a broker, you guys need to head over to capital-markets.com. We're one of the best brokers in the entire industry, okay? We have some of the tightest spreads, which means you'll be paying less and less per trade. It's very important. And we also route from some of the best liquidity providers, all right? That means you get filled instantly, okay? So head over to capital-markets.com. My name is Cleveland Bishop. I'll talk to you guys tomorrow.